Hello and welcome to another Smaulgld live stream. It is Monday evening, the 26th of August, 2019. And tonight's topic, what's up with Indian gold demand? Indian gold demand is basically measured by Indian gold imports. For most countries, you measure the gold demand by how much gold is purchased in the country. And in India, for the most part, other than the scrap gold, the reused gold that's sold, the bulk of gold demand is satisfied through gold imports, official imports, and smuggled gold. As a result, I like to look at the gold import numbers, the official numbers that the Indian government reports as gold that is being claimed at the border as coming into India. India doesn't really have a domestic gold mining production from which to satisfy demand. There are approximately 18 to 22,000 tons of gold supposedly estimated in India. About 4,000 of those tons held by temples, the rest held and accumulated over long periods of time by the Indian people. The Indian Central Bank has about 620 tons of gold. So, it's not the government that has the gold, it is the people. Now, that's not to say that the government hasn't tried to get it from them. They've done a number of things. There's a country that's seriously considering banning cryptocurrencies. They have effectively, at one point, just a couple of years ago, banned their own currency. They made people turn in 80% of the paper currency. If they didn't do it, then that currency, those particular notes, those rupees, would have become worthless. So it kind of forced a certain amount of money into the banking system. People had to answer questions about where they got the money, where they got the rupees, and if they didn't have good answers, well then that's how they were supposedly ferreting out crime and corruption and fraud. So India takes a very heavy-handed government approach to its money, and gold is no different. Gold, because it is imported in such large amounts, and we're going to get into some charts. I'm going to show you some charts on how much gold India actually imports. And it dwarfs the amount, these big amounts that we hear, Russia's stacking gold, the Russian central bank, far more than that. Tremendous amounts of gold go into India. But India doesn't like that. That's dead money to them, and it screws up their balance of trade. In a good year, depending on how you look at it, when gold imports are high, they could constitute 15-20% of net imports. And that will make them have a trade imbalance. So they don't like that. They don't really like the people having the gold either, because they know that people view it as a store of value versus the rupee. And I'm going to show you some charts on that, and that clearly is the case. The rupee does not hold up well versus gold. I've got some short and long-term charts to show you there. India has also, because they don't like all this gold coming into the country, have, I think since 2013, set a 10% import duty, even with that 10% import duty. We see large amounts of gold still coming in, and who knows how much gold is smuggled. I used to track for fun for about a year. I used to do a search, and almost every day there was a story about someone getting caught in India, bringing gold into the country in all types of, I mean, you can think of the normal ways where they bring it where the sun doesn't shine, but all types of really clever ways. But the most clever way that I heard of was you come in from a country where you get the gold and you land in India. And instead of getting off the plane and then getting caught with the gold, what you do is you leave the gold with the drug-sniffing dog. Now, you leave the gold on the plane hidden, maybe in the bathroom, somewhere. And then you have a colleague who's going to take that plane on a domestic flight within India. He will go in and retrieve the gold. Let's say he's in Mumbai and he's getting a connecting flight to Calcutta or something. He gets on that and then he takes the gold off the plane in the domestic flight area where they don't check you, and that's how a lot of gold got in. I'm sure they've caught on to that trick as well, but there's all these many tricks. So the point is that India tries to do what it can to stop the gold coming in with this 10% import duty, but also once the gold is in the country, about 2 years ago, they slapped another 5% tax, goods and services tax on gold. Even so, gold demand still continues to be at elevated levels for the last 10, 15 years. We'll show you some charts on that. But then also they've done a gold monetization whereby they tried to get people to turn their gold in for a bond, a gold bond. So you give them your 20 grams of gold or however much you have, and they give you a bond in that amount, and they pay you interest on your gold. Not many people took them up on that. The other thing they're trying to do is digitize people's gold. To say, okay, you have it, but we want to know you have it, so put it on the blockchain or whatever this mechanism they have. I looked at the website once, and now you can buy, sell, and trade your gold, so to speak, on that chain. You bring it into the bank, and they claim that you still have that gold. So you can see India is very much paying attention to what its citizens do with cryptocurrencies, rupee, and gold. And we're going to get to silver tomorrow. But now let's take a look at some of these charts that kind of explain what I was talking about with the gold. Now we got to make sure that this is still working here. It looks like I'm getting a non-response, which is not good. Look at that. The computer's freezing up. Oh, there it is. Okay. We should be able to get your charts here because sometimes Google screws me up, but this looks like this is my own computer. I apologize. We'll get right back to it here. Okay, we are Indian gold. So the first thing I want to show you is just Indian gold imports, the scope of what we were talking about. How much gold actually comes into the country each year officially, not through smuggling. Who knows if the smuggling amounts are equal to, less than, greater than these numbers. But you can see the peak year 2011 was 1,079. Now, normally, this is an important point. Indians do not buy gold on the way up. They try not to buy it at its peak. They generally are not FOMO players because they are lifelong gold buyers. They always, through the course of their lifetime, if they are gold buyers, will buy when it's low. They're not worried that they're going to miss the boat. Now, maybe perhaps in 2010 and 11, additional buyers came into the Indian market, and that's why you're seeing very high numbers in 2011, 12, and 13, or 10, 11, and 12, almost 1,000 tons each year. Now, remember, when you get all excited about Russia, Russia's biggest year was 223 tons of adding gold to reserves for the Central Bank of Russia. You can see here, you're dealing with 3, 4, and 5 times that amount. This is just gold pouring into India, and it ends up mostly in the form of jewelry, bangles, bracelets, necklaces, rings, some bullion. Indians like it especially the rural farmers. That's how they save. If you get a good monsoon season, you get a lot of rain, you get good crops, more than just to live off of. You can sell some of it. You're going to pour that into gold. And you can see here, it's been a steady amount of gold. You always see these articles in the Western press. Indians are losing their love affair of gold. They're going digital. You don't really see that. I mean, look at these numbers. If you go back to 2000, 2001, 2, 3, 4, the numbers since then have always been larger pretty much. And it looks like we're averaging in the last 10 years a lot more than we were averaging from 2000 to 2009. And again, 2017, you had 900 tons, 2015, 950 tons. This year, it looks like they'll probably do about 800 tons again. Gold imports. All right, let's see what else we have here. Now, here is a chart that's going to show you the ebbs and flows. And you can see it ebbs and flows. And in a given month, just a month, most months, you can see the chart there. All these charts will be on Smaulgld.com. You should subscribe over there. You can check out the charts at your leisure. You have to just follow along or find the spot on the video. All the charts are below. Excuse me. And so what you see here is 50 tons a month is pretty much a given, especially the last 3 years. And sometimes it's over 100 tons a month, generally in the 60s or 70 tons a month. A lot of gold going into India. And they're not chasing price. Now, Americans and others chase price. The gold demand rises because the gold demand is going higher and because the price is going higher. And we're seeing that. We saw that last night in Solid Gold Sunday with Smaulgld, how institutional investors are pouring into gold. Gold ETFs. We're seeing the registration of gold on the COMEX. People pour into gold as the price rises, whereas Indians tend to pour into gold when the price is lower. I suspect, though, when the price rises, you have some Indians, additional demand, that do come in and play the FOMO. But remember, when the price rises in gold, there is a segment of the buying public that goes away. So you have to offset that physical demand for jewelry that may be considered a luxury item or too expensive at the moment with investment demand. Demand that's chasing it. Now, when you have investment demand chasing something, that's when you get the spike and the dive, though. Because for whatever reason, people are chasing gold, if it's for price, and the price goes down, well, then they're not going to chase it anymore. And that's what seems to happen to silver. You got to be careful with silver. I always talk about silver having this monetary component, investment component that's dormant. All the silver is money, period. No, it's not. Silver is got a very slim, no one uses it as a currency, so therefore it can't be active money. It fits all the characteristics of money, but no one uses it as a medium of exchange. So what? It's divisible and fungible. People don't use it as a medium of exchange. It's not easy. It's not acceptable worldwide. So that's why silver does not have a monetary premium, because at least central banks and regular banks can hold gold as a tier 1 asset if you're a commercial bank. But the central banks also hold gold as a asset well before Basel III went into place. But what happens to silver in the last 50 years, since we're in the demonetization of precious metals era after 1965 when they got rid of the silver out of the U.S. currency, and all other Western nations and Australia and Japan, they all got rid of their silver currency in the 60s and 70s. And then, of course, the world went off the gold standard unilaterally when Richard Nixon told the other central banks that were signatories to Bretton Woods, you're not getting any gold for those dollars you bring to us. So since 1971, really since 1974, when the U.S. legalized ownership of gold again, the gold-silver ratio has been elevated, and that's because gold has a much higher percentage of investment/monetary value as a percentage of its overall demand. So in the 90s and early 2000s, silver had about a 5%, 2% investment component of its overall demand. Now it's about 10, 12%. So the point I'm making is not to get off on a tangent on silver, but this does tie into what happens in India or anywhere when people rush into a metal for investment purposes, for FOMO purposes. You saw it in cryptocurrencies. People rushed into cryptocurrencies at the end of 2017 because it was going higher. And I always say, if people are rushing in because it goes higher and they have no idea why they're buying something, they're going to rush out when it drops, because that's not why they're holding it. They're not holding it to drop. They're holding it to rise. And if that reason is gone, there's no reason to buy it anymore. All the more reason to sell. Gold is different because gold has a solid demand for not just investment, but investment jewelry, That's the bulk of the demand. You take the jewelry and the investment part, but most of the jewelry is also investment. And there's pretty much a solid demand there. However, the investment demand is going to be more FOMO. It's going to be more, oh, the price is rising. Oh, we're having a financial crisis. Oh, I'm worried about inflation. Got to get into gold. Most people don't rush out to buy a gold necklace. And in some respects, even though they consider it an investment, they may not buy it because they're not going to trade it right away. If they're looking to accumulate a gold jewelry portfolio over time for a dowry or something like that, they're going to try to buy opportunistically. So they may hold back on buying as the price is rising. Now, the reason I mentioned silver is, since silver has a very small investment demand, that's why you see those spikes in those dies. When FOMO kicks into gold, even when the FOMO fades, there's still a built-in group of people who are going to buy gold jewelry. Whereas in silver, the demand in industry, when you have this FOMO, doesn't get any greater or any less. It just sits there. There's always a certain amount of demand, approximately, for electronics, for solar panels, and so on. But when that investment demand spikes because the price is rising, well, that's exactly what happens on the flip side when the price starts to come down. And that's why you look at the chart. I didn't mean to get off on this, but if you look at a chart in 1980 and 2011, both times the price of silver spiked and dived. And gold did, gold went down, but not to the same extent. Also, gold didn't go up the same fast. Okay, let's look at Indian gold imports, though. Compare the 2 years. We're actually up this year. I had the numbers, but we're up relative. Did I write them down? I probably did. But you can see that this year, India is probably going to beat the 791 tons that it did last year, because pretty much every month other than February, the imports have been higher than 2018. So in January, 55 tons. In February, 60 tons. March, 78. April, 96. May, 116. June, 61. We're hearing noise now that July and August are not going to be as good. So maybe not, because the price is rising. And there was actually news out today that now gold price is hitting all-time highs. This one story here about 40,000 rupee for 10 grams. I have the charts that'll show us, I'll show you to you now, the price in ounces. And here you can see at all-time high right now, 109,000 rupees per ounce of gold. And you go back just 2 years and it was 84,000. So you're not doing very well holding on to rupees in India, and hence gold definitely has a place in the hearts of the Indians. Let's go back 20 years. Again, these charts, you can, if I'm going too fast, you can always go to Smaulgld.com and take a look at them. And here you can see all-time high, 107,008 rupee. But if you go back to 1998, you could get an ounce of gold for 10,000 rupee. So it's gone up 11 times. It hasn't gone up 11 times against the dollar. And yeah, that just shows the Indian rupee has just gotten crushed. Even 2011, it hit its high of 90,000 when the U.S. hit its high. Continued to hit all-time highs into 2013 when the dollar, when the gold versus the dollar in 2012 and 13 was actually going down. But India continued to rise, and finally it passed those all-time highs just this week. Let's go back even further. And let's do back since, let's say 1970, the period of time I'm talking about when Nixon took the U.S. off the gold standard. I mean, you can't even read the chart here, how low it is compared. And this will tell you something. If you were a young Indian gentleman or woman in 1970 and you were just doing what they were doing, is buying gold regularly in the form of 22, 24 karat jewelry. Not that you'd be a rich person today, but you might be. Remember that Indian guy walking around with that gold suit. But clearly, if you'd held it in rupees, you would be destitute compared to the value that gold held versus the rupee. Now, one other story came out today And again, it was talking about the high prices and the impact it's going to have on Indian gold demand. This was in Economic Times of India. And the headline is, price surge spells hell for Indian gold demand. So there's a lot of things. They try to stop gold. India's government tries to stop it. They try to demonetize it. They try to monetize it. They try to digitize it. They try to tax it. They try to put import duty on it. They try to stop smuggling. And it doesn't really slow it down, but will slow down Indian gold demand, or Indian gold imports will be price. If the price gets too high, they will slam on the brakes, unless they think that, I don't know if they're subject to the pumping that if you don't buy gold now, there'll never be any gold available. I mean, I think the entire history of India, there's always been gold available. It just depends on the price. So I don't know if they've got a series of pumper channels out there telling them that kind of stuff. COMEX is going to default. China is going to do a gold-backed yuan. I don't know if they listen to that kind of stuff. I think they have their own views on when they're going to buy gold. But here it says, jewelers in India, this is in the Economic Times of India, saying they're facing a bleak outlook as record high prices. These are record high prices. And you're having fading demand, and says it's going to drag gold sales down to the lowest level in 3 years. Not like 3 years ago they were at rock bottom, but you know, they're up the last couple of years. And here's the point they make that shows on our chart. The first 6 months, that's what we have. We were up over last year, and they're saying jewelry demand was up 9% during that period of time. And doesn't look like it's going to happen this year, that they probably expecting a slowdown. Now, you never know. You never know what might happen. I was projecting at the current rate they would pass last year, just based on the first 6 months are better than the first 6 months of last year. But now, here's a person from the Indian Gem and Jewelry Domestic Council. He's saying they can go as low as 666 tons a year. Let's go back to that chart that we showed on where we are so far after 6 months. Again, ahead of 2017, but let's take a look at the gold. And yeah, so he's only predicting another 200 tons for the rest of the year. So July, August, September, October, November, December. He's saying, or they're projecting 200 tons over 6 months. And if you do that divided by 6, they're saying only 33 tons a month. That's pretty low. But let's look at how often 33 tons a month happens in the past. Well, you did have a period. You can see that period. I think that's 2016. That was the low year in the chart. You can see it's below 50. We really don't get 33 tons a month since then. We haven't had that. So they're actually predicting. And again, that all depends on the price staying high. If the price continues to go higher, most likely it'll curb demand. But you could get into a mania. But remember, any type of mania would most likely be followed by a collapse. That's just the nature of bubbles. Price goes vertical, price goes, what goes up must come down. So India is very important for the physical gold market. So is China. And then the other big component of gold demand is going to be ETFs and those types of products. And then central banks will be about 10% of gold demand. American gold eagles, American gold buffaloes, that stuff. That is not even a rounding error, the amount of gold that the U.S. Mint sells, which is interesting. You would think it would be a bigger component, but the big gold is in jewelry. That's the biggest component, maybe 45%. Then investment gold, about 40%. And 10% is central bank buying, but a lot of investment buying, ETFs, and other stored gold for wealthy clients. All right, well, let's see what you guys are thinking about gold or anything else. The gold price today, last night it shot up. It kind of fell off, and leads me to believe that short term, the gold price and the silver price are reacting to always getting cut off. Can never fix that. Sorry about that. I was saying that the gold price has been reacting short term to whatever goes on between the U.S. and China trade agreement. Gold price shot up last night because it looked like China and the United States were exchanging barbs. Late in the evening or early this morning, they were talking about being calm and having a discussion, and Trump saying this is positive. So that drove the stock market higher and then gold lower. So we're seeing that yin and yang, not to make a Chinese reference, but on the pronouncements over how the trade negotiation is going. But all along, even during this, even when you have the quote positive news, and maybe it knocks gold down a bit when they start talking about maybe they'll have a deal, the trend has been higher. And I think that is the overall economics of what's going on, the negative interest rates, the Chinese-U.S. turmoil. But more importantly, it's not just the U.S.-Chinese turmoil, is who's going to snap first. And I don't mean in the trade negotiations. I mean, which big entity, Japan, ECB, China, Thailand, Turkey, is going to have a currency crisis, is going to have a debt crisis of something, not just Argentina or countries like that or Venezuela. What major entity is going to have an issue, and what's the spillover effect going to be? And it seems inevitable that it's going to happen. With the dollar keeps rising and they keep having to push negative interest rates, and all countries are trying to promote their economies through lower and lower negative interest rates, and also through purchasing assets, or in the case of China, just building more bridges and infrastructure, bridges to nowhere. There does, as everyone knows, come a point where you just can't keep spending and printing money without creating some type of either inflation, or you just collapse. And that's what I think is driving the price of gold higher. And as I say, if gold continues to go higher, silver will catch that investment bid and probably will go higher. Not investment advice, just my opinion. All right, let's see what you guys are saying in the comments, what your opinion is on gold and whatever else. Philip McCain and Philip Quinn are here, and Fiona is here. We got the gang all here. This looks like a new one. Dan SPL from Ontario. Hello, Dan. Got to keep checking to make sure I'm not getting cut off on this YouTube. Okay. Where's Barry? Indians keep trying to call me to scam me. Oh, okay. Where is India importing most gold from? Well, they get it from a variety of sources, but a lot of it comes through Switzerland, but it comes from all over. Switzerland is a big hub for gold because they have a lot of the refiners there. So what you have to do to trace it is you have to look at, and I should, I'll do a show on this. Maybe Solid Gold Sunday I'll show the flows. A lot of gold flows from certain countries into Switzerland, and then from Switzerland back out to other countries. So some countries will send their gold to Switzerland and just ask for it back in the cash form, and then they may trade it. But it gets complicated, but Switzerland is a hub for refining of gold. All right. Let's see. So Dan says he's new to the chat, but he is loving the video, so I like that. Well, it doesn't look like we got many comments tonight, but that's okay. Yeah, Jeff says Indian farmers deal only in gold. Yes, so they're going to deal in gold, and when they get rid of the rupees as soon as they have them, and they might even have a bank account, and they will deal in gold. Okay. All right, everyone. Well, if we got no more questions or comments, I'm going to leave you off for tonight, and we will see you tomorrow. I think we've got to do some catching up on what's going on in the crypto space, so we'll probably do that tomorrow. There's not, there's a bigger audience for the cryptocurrencies over on BitChute than the YouTube channel is pretty much, well, it's because it started as only gold, silver, and real estate. And then I started covering cryptocurrencies, and some people don't like that. Some people have asset adoration. We have people that are only into silver, and they just tune into all the silver channels, and silver is so useful, and we cannot lead our lives without silver. And some people are just into gold, and then some people are just into Bitcoin, and some people just say, I don't get into that. I try to analyze everything. Just for you people who are new, you maybe you don't know that. This is not a channel that promotes or pumps any particular asset. And if I'm critical of an asset, it doesn't mean I'm against it. It just means that there's no such thing as a perfect asset. And some people, if you want to believe and you want to adore an asset and you want to get in a cheerleading club, there's plenty of channels out there that'll tell you whatever your favorite asset is, how it's going to skyrocket, why it's undervalued. No, sometimes these things are not undervalued. It's just your perception. You want something to be higher and you think the world doesn't understand your particular asset. So that's just how I look at things. But I do want to thank everyone for joining me this evening, and also for those of you who donate via PayPal, via Subscribestar, Patreon. People send me stuff to the Smaulgld P.O. Box. And of course, those of you who buy mugs and Smaulgld beer steins and beer mugs, and those of you who send me Bitcoin and Litecoin. So thank you very much, and we'll see you tomorrow.